Hey, hi. Yeah, today I just wanted to share with you a little bit about one of the consequences of a recession. Of course, you got deflation coming up, or you have stagflation coming up. Usually, in a recession or inflationary environment, the next batch of negative catalysts that can possibly come up would be either deflation or stagflation talks. This would be probably the next mainstream media kind of fear that they want to probably go out there. It could be true, may not be true, in the sense that may happen or may not happen. Of course, if you look at the Fed and the Treasuries, they are saying that the U.S. may not go into a recession, or the likelihood of stagflation is not there, or deflation is not there. So let's look at the meaning of stagflation. I think which is the most likely scenario um, than deflation. Stagflation is a period when slow economic growth and joblessness coincide with rising inflation. Okay, the next question, of course, we just study them, these four particular big sentences. Slow economic growth. Well, if you can see Q1, the Visa has registered growth in transactions. Consumer products are still up quite a lot, still growing, and services sector like hotels and travels and all that, prices has gone up as well. Joblessness, yeah, you see some companies shutting down or retrenching staffs like Robinhood, or CNN Plus that actually shuts operations and all that. But we don't see anything major. We see slower growth in the uh, wages, which is actually a good sign. It's kind of like you need that balance, not having too much joblessness, at the same time not too much wage spiraling, meaning companies pitching for staffs. So I think generally economy in US are still doing pretty well as the economy reopens and normalize. Then the next question is, okay, as oil and gas hit record prices, Google searches for the term stagflation has spiked. Well, I think US will definitely do their part to actually, use whatever reserves that they have. US has a lot of reserve in terms of gas and oil, from fracking and all that in Alaska as well. They just need to get it out from the system. If Venezuela and Saudi Arabia are not cooperating to increase output and to reduce um, the oil price, and you can see slower economic growth, yeah, is there. It's not only happening in US though, it's everywhere. The question is, probably US would have the lowest in slowest slow growth compared to, let's say, China, that has major shutdown and all that. So slower economic growth also will reduce commodity prices. And the next question, of course, if you see China, stagflation will be likelier to happen because they have greater number of joblessness and higher chance of slower economic growth, and it's more likelihood as well in European Union countries. But then if you look at US, yeah, maybe not so likely, relatively speaking. So, expert Alberto Gallo has stated that financial markets are caught between stagflation worries and hope that the domestic product will pick up speed. US definitely are doing well in terms of GDP, although there's been a drop by 1.8%. You can see the stimulus that has been happening in 2020, the money printing machines are all there, and yet people are still giving, US dollars are still going up with all these talks only about monetary tightening. Or and there are still even this talk about waiving 50,000 student loans that will create more spending in the market. So the government interference will be there, putting more oil in the market. So I think rising economic energy prices and supply, yeah, I think specific sector of commodities like potassium, palladium and all that will still continue because you Russia is like doing a slow death to Ukraine, and shutting out all the ports and invading all the ports or sea near to sea kind of uh, territories. So you can see slowly those things that are from Ukraine and Russia, those exports would be affected. But you may never know. They could still be in the black market, whereby there's still significant purchase of all these Ukrainian product, commodities, raw materials, and likewise for Russia. So this is something that the next thing about the rising inflation that lasts longer than expected. A modern day stagflation that impacts consumer spending. Um, so perspectives say wages are rising, but often not enough to keep up with the price increase. Yeah, which is happening now. Stagflation is taking root around the globe. Energy price increase just were a wake up call for markets, more like develop into one where we get high inflation and weaker output. As growth has picked up in the world's big economies, the worry is a high price on everything from gallon of gasoline to hourly labor could slow that recovery. In terms of force central banks to raise borrowing costs. Borrowing costs is something that I think would be marginal, but you never know for companies that has high gearing. You will see that their corporate profits will shrink, and that will affect their quarterly revenue and quarterly profits. But that may not necessarily lead to a stagflation, because stagflation is something that is consumer driven. If the company that has lower reduced profit margins, but if they don't retrench workers are still they are still high employment, despite the slight rise in their cost of production or cost of input for all those companies. Stagflation will not happen, which I don't think it will, because especially in US, I'm talking about US in particular, maybe in other countries. So yeah, take note of this. So I think stagflation fear is it's actually something that we probably can discount that for the moment, but we can develop our thoughts as we go along. Let me know if you have any ideas. Please comment below, and I'd love to hear your views. And thank you very much for this video, and I hope you like this video and subscribe to the channel. Thanks a lot.